What if I told you that something just broke in the banking system? Not a bank failure, not a liquidity crisis. Something more fundamental. Something that changes the rules of the game. Because right now, the banking system is showing stress fractures that haven't appeared since 2008. And gold is the only asset that's positioned to benefit from what comes next. Let me explain what's really going on. The banking system is supposed to be stable. That's what regulators tell us. That's what stress tests are supposed to prove. Banks are well capitalized, well regulated, and safe. Except, something just broke. In the last 90 days, 5 regional banks have reported significant losses on their bond portfolios. Not loan losses, bond losses. The supposedly safe assets that banks hold as reserves are losing value. Why? Because interest rates rose faster than anyone expected. And when rates rise, bond prices fall. Banks that loaded up on long-term treasuries at low rates are now sitting on massive unrealized losses. The FDIC estimates that U.S. banks are sitting on over $640 billion in unrealized losses on their bond portfolios. That's not a small number. That's a systemic risk. And it gets worse. Banks are also facing deposit flight. As interest rates rose, depositors moved money from checking accounts paying 0% to money market funds paying 5%. Banks lost over $1.2 trillion in deposits in the last 18 months. Less deposits means less lending capacity. Less lending means slower economic growth. Slower growth means more pressure on banks. It's a vicious cycle. But here's what the mainstream media isn't telling you. When banks are under stress, when the financial system is showing cracks, there's only one asset that benefits: gold. Gold doesn't have counterparty risk. Gold doesn't depend on the solvency of financial institutions. Gold is the ultimate safe haven when the banking system is in trouble. And right now, the banking system is in trouble. Look at what's happening in Europe. Credit Suisse collapsed. Deutsche Bank is showing stress. Italian banks are struggling with sovereign debt exposure. The European banking system is one crisis away from needing another bailout. In the US, the situation is more subtle, but equally dangerous. Regional banks are cutting lending. Commercial real estate loans are going bad. Office buildings are empty. Retail spaces are vacant. The collateral backing trillions in commercial real estate debt is worth less than the loans. And the Fed can't fix this with interest rate policy. They can't lower rates without reigniting inflation. They can't raise rates without putting more pressure on banks. They're trapped. So what happens next? The same thing that always happens when the banking system is in crisis. Flight to safety. And in a banking crisis, the safest asset is the one that doesn't depend on banks. Gold. We're already seeing this in the data. Central bank gold purchases hit record levels in 2023. They're on pace to exceed that in 2024. And these aren't Western central banks. These are emerging market central banks that remember what happened in 2008. They're buying gold because they know the banking system is fragile. They know another crisis is coming. And they know that when it hits, gold is the only asset that maintains its value. Now here's something most people miss when they think about protecting themselves with precious metals. If you're buying coins or bars, you're protecting maybe a few $1,000s. Maybe 10 or 20,000 if you're really committed. But where's the majority of your wealth? For most Americans, it's in retirement accounts, 401ks, IRAs, accounts that are still denominated entirely in dollars. So you buy some gold eagles or silver rounds. You've got physical metal you can hold. That's great for a portion of your wealth. But what about the 200,000, 300,000, 500,000 sitting in your retirement account? That's still fully exposed to dollar devaluation. And here's what most people don't realize. You can hold physical gold and silver inside your retirement account. It's called a gold IRA. The IRS explicitly allows it. You can roll over existing 401ks or IRAs into an account backed by physical precious metals without triggering taxes or penalties. Think about what that means. Instead of protecting a few $1,000s with bullion purchases, you're protecting your entire retirement at scale. And you're doing it with pre-tax dollars, maintaining all the tax advantages of a traditional retirement account while backing it with hard assets instead of paper currency. I've put together a comprehensive guide that walks through exactly how gold IRAs work, the specific rules and requirements, how to evaluate custodians, and how to structure a precious metals retirement account for maximum protection. It's completely free. Link is in the description below. This is specifically for Americans with at least $100,000 in retirement accounts. Because that's the level where this strategy makes the most sense, where you have enough wealth that protecting it at scale becomes critical. The guide covers everything: the rollover process, the types of metals that qualify, the storage requirements, the tax implications. Everything you need to make an informed decision about whether this makes sense for your situation. The gold market is telling you something right now. The question is whether you're listening. Your retirement account, your life savings, is denominated in a currency that's being systematically devalued, and by the time it's obvious to everyone, it's too late to protect yourself at reasonable prices. This is why understanding gold IRAs is so critical. It's not about selling you something. It's about education. Understanding your options before you need to make a decision under pressure. Don't be most people. Understand what's happening. Understand your options, and position yourself accordingly. The guide I mentioned is free. The information is there. What you do with it is up to you. But do something, because the gold market just changed, and what comes next is going to reshape the precious metals landscape for the next decade. Are you going to be one of them?